What's up, people? Today is Monday, October 16th, and it's currently 5:36 p.m. So I wasn't able to do the weekly recap for last week on time, but this is the weekly recap for Monday, October 9th through Friday, October 13th. Now, looking at this spreadsheet, so this was this week right here. So Monday, October 9th, we didn't have any trades, any official trades, let me put it that way. Any official trades. Tuesday, no official trades. Wednesday, no official trades. Thursday, we had an official trade on the live session, which I'll go over now, and ended up as a loss of just minus 0.75%. And as we'll see again, we just got faked out and the trade came back up, but anyway, still a loss. On Friday, we had two trades and I'll go over them. And one of them was minus 0.375. 0.375, I think. Yes, 0.375% loss. And the second one was also 0.375% loss, for also a total of minus 0.75 for Friday. So unfortunately, we've had a little bit of a losing streak, but so down for the month of October so far, minus 2.25%. And yes, so actually, so today too, but anyway, this will be for this week. So today, no official trades as well, even though I did send a trade idea today that went straight into profit, but we'll talk about that a little later. So for now, let's go over the trade for Thursday. So Thursday, so again, I'm replaying the chart in order to show you the price movement. So on Thursday, we had a double sell SAR somewhere around here. Again, I'm doing this after the fact, but if you go on the Discord, this was the trade setup here. We had a double SAR somewhere, somewhere around this zone. So here, when we mark this up, and again, of course, we can't see those ones because they were from a little bit far back, and it's already past the 500 candle limit TradingView allows. So this one, go ahead and mark this up, and mark this up as a test and rejection. So that was a test and rejection for a buy. Daily bias on gold was still bullish. So if we go here on the daily bias, by this time, the bullish bias on gold started on Thursday, because that's when there was that closure above this bullish SAR. So this was on Thursday around, right when price was still around 1874 area. Now here, and you can see that's the same place price was. So here, this was a double SAR zone. So since the zone was below us, we wanted what price gave us here was a test and rejection entry. So the first candle was the test candle, came and tested that double SAR zone, and this is the rejection candle, which also closed above. So that qualified as a test and rejection entry. Also, this happened during the live session. So at this point, I told folks I was buying gold with a 30 pips stop loss, 60 pips TP. So I entered on the next candle, because this to me was one of the nice setups, because the entry point was right next to the SARs, which is what you want to have. So at this point, so price started off in profit, you can see, right? So here the goal is for my trades is to set a 1:1 when you've already achieved, set break even when you've already achieved a 1:1 risk to reward. So here you can see we almost had that 1:1 risk to reward, which would have allowed us to set break even. So for me, it's always either stop loss, TP, or break even. No in between. You just got to trust your setups. If the trade is valid, you just go ahead and take it, and whatever happens, happens. But that was it right there. Let me see this, just make sure I'm putting it there. So you can see we came so close to the trade being like 30 pips in profit, at which point we would have set break even. But at this point, we had the reversal to the downside. Now let's look at this reversal. So at this point, right, trade did not give us a 1:1. So we still, personally, I still held on to the trade. There were people who took profit, and also this would have turned from a possible to a test and rejection because it validated as it. And then here you see gold kept dropping. And then at this point, I got stopped out, or anybody else who was holding the trade got stopped out as well. And if we keep seeing what happened here, right, price dipped down, and later on in the day we had price recovering to the upside. But anyway, at this point we had already been stopped out of the trade. But this is when then on Friday gold retraced up so heavily and went, you know, in Friday, that's when gold broke even the 1900 zone. So you'll see here, right, gold kept spiking and spiking, but you can see this, right, we just got manipulated a little bit of, you know. So for this trade, even looking back, there's really not much we could have done to avoid this. We just got caught in a stop hunt. But to me, this was a good trade. How I define a good trade is when your entry is next to, and I always insist this during the live session, so when I'm educating, when your entry is next to the SARs, that is the best setup right there, so that you don't have to go to other time frames to seek another entry. Like when your entry is right next to those SARs, whether it's a break and continuation, whether it's a test and rejection, that is what you want. So for me, with this trade, do I feel bad? No, it's just one of those instances where we just got caught in a stop hunt and we moved on to the next trade. So that was the loss we took on Thursday. So I'll exit this chart replay mode, and you can see where gold is at right now, right? Look at that. Look at that pump. So anyway, on to the next one. So for Friday, this loss we took on Friday, that was US 30. So again, I've replayed the chart. So you can see here the current candle is Friday, October 13th. So this is a 15-minute candle. I believe it was a 15-minute entry. So here we have a double SAR, and this SAR is still there. So we can see this live. So here, what entry was forming here? Since price, the level at some point was below the price, so this would be a break and continuation entry. So here you come here and you mark up your entry. So you mark that up, come in here. So this is a break and continuation for a buy. So at this point, it was still a possible break and continuation. And then when the next candle closed, and we'll see that for it to be break and continuation, this candle also had to close above. So remember, my entries are always 2 candles. So here went from being a possible to a break and continuation. Now I saw this trade, and I marked it up. It was during the live session again, and I marked this trade up, 50 pips stop loss, 100 pips TP. Now for this trade, I had mentioned, and the reason I say to use a 0.375 as opposed to like the normal 0.75 per trade that I take, is looking at this price or structure right here. This was during New York Open, so you can see how far price had pushed. And again, also it's on a Friday. So a red flag here to me was the overextension of price. So price had shot up pretty heavily. And even here, for the people who trade ICT concepts or smart money concepts, you can see there is some fair value gap here, right between in between this big candle. But given my overall bias on US 30, and also given where the entry had validated, remember the key thing is to make sure your entry is next to your SAR. So right, for this entry, it allowed us to have an entry next to the SARs. But also looking at the red flag there, I just said instead of taking a 0.75% risk, you go ahead and do 0.375. So we hopped onto this trade with 0.375. Unfortunately, the trade melted to the downside. Again, I know there was a red flag there. So compared to the previous trade I just went over for gold, for this one, if I ask myself, is there anything we could have done better? So this one, and I even went ahead and journaled this one. So if we get a similar trade like this going forward, and you have overextension, so overextension at this point to me is a red flag. So if I ever get any other setup that's similar to this, I won't take the trade, because again, it's all about learning. You learn from what has happened and then you just decide. But I've also seen instances where such a setup would have gone straight to TP. So I guess going forward, it's just weighing those two options. That I know from experience, there's trades like this that have gone to full TP despite price being overextended. And then there's other trades like this, for example, like this one that happened, that price went straight to stop loss. But thinking back, I think this one, it ended up the way it ended up, not really because of the overextension, but because of the day of the week. So this day was Friday. So Friday, you normally have low liquidity in the market. You normally have some irregular price movements, because you have to consider Friday, like for example here, it was during New York Open, so you have to keep in mind that's the end of the trading week. There's not going to be like that evening Asian session, because this is the last trading session of the week. So London is closed, Asia is also closed for trading, so New York is the only one that's open. So I want to say I've seen the trades that I've seen that are similar to this that go into TP or take profit are during normal trading days or regular trading days, like Tuesday or Monday, Wednesday, Thursday. So Friday, you definitely have some irregular price movements. But anyway, so that was the first one, 0.375. Now for this trade, when you took that loss, so normally some of the things that I do, if price is overextended, sometimes what I do, I will go on a lower time frame. So in here, after we got stopped out of this one, another thing you see here is that as much as this trade was based off of this double SAR here, we also had another double SAR, which is right here, this small one right here. So another thing so there was that entry, and then guess what? There was also a break and continuation of this double SAR right here, because this break and continuation, so this huge candle and the next one actually gave us two break and continuation setups, because it broke and continued this double SAR zone and it broke and continued this double SAR zone. So at this point, if forgetting this top SAR, so at this point, if you're looking to trade this double SAR zone, and the key thing is to make sure your stop loss is below the SARs you're trading. So if I was trading this bottom zone and not this top zone up here, I wouldn't have entered on impulse. I wouldn't have entered up there. I would have waited for price to retrace to this double SAR zone. So we had gotten stopped out on that one trade, and then I saw that there was also another break and continuation, and it was validating here. Now, what you'd normally expect if your trade has validated and price is retracing, or you're waiting for price to retrace back down to your SAR level, you then go down to the 1 minute time frame. So at this point, I said I was going down to the 1 minute time frame. So here, when you go down to the 1 minute time frame, because I don't extend my SARs on the 1 minute time frame. So here, when you go down to the 1 minute time frame, what you're looking for price to retrace to the zone, to those SAR zones that you're trading, and then you wait for an entry on a live SAR. So in this instance, right, if you're looking for a break and continuation, so here we would want to wait for a break and continuation on the 1 minute time frame. So that was the second trade that we took. So here we keep playing the candles. We want to see a live SAR, and then we want to see a break and continuation. So let's see. So there's the live SAR. So that's the break candle, that's the continuation candle. So again, here I said I was buying US 30, 50 pips stop loss, 100 pips TP with 0.375% risk. So again, trade started off in drawdown, and then came back up, so it was in and out of profit, and at this point liquidity had started dying out, but we got some nice push up. So even for this trade, keep in mind, for me, when you achieve a 1:1 risk to reward, you said break even. So even for us for this trade, we were waiting. If US30 got to this point, we would have set break even, but you can see what happened, right? Price was just coming back down and eventually came back down and took us out at stop loss. So again, for this trade and the one on Thursday, right, we just missed that 1:1 risk to reward just by a few pips. And I think later on in the day, but right, this is also the importance of putting a stop loss, because you can see at some point US30 kept melting to the downside, but I think later on in the day we had some spike up for US30. So let's see, do this, delete this real quick. I think later on in the afternoon, or did this happen Sunday? This was still Friday. Yeah, that's still Friday. So I want to see, if I'm not wrong, US30 spiked up later. Because even now US30 is all the way up. No, I don't want to do the real time. Let me do this. Oh, yeah, there's that spike I'm looking for. Let me 10x this. Consolidation. Yeah, it didn't. I think maybe it spiked up this morning, like Saturday, Monday. Yeah, but later on in the day, yeah, price just died off. But eventually, this was market open yesterday. But if we go and see where US30 is right now, we will see it's compared to where we were trying to enter. Right, look at our entry. So our entry was there, came, and then eventually it came and spiked all the way up. But you know, that's just the market. You get both the good and the bad. But anyway, so for the Friday trade, or for the Friday trades, of course, there's those few things that we learned and those we can apply going forward. So it's all about learning. But right now you can see how US30 spiked all the way up. Today I caught a nice buy on US30. I just sent it in the trade ideas. It wasn't an official trade, but you guys see here, if I go in the trade ideas, there was a nice US30 buy that I'd sent. Again, this is not going to count as an official trade, because an official trade I normally send out with the entry parameters, but you can still use my trade ideas and decide whether you're going to take the trade or not, because I know there are people who took the trade here. But you can see for me, I took that trade. It's a trade I took today. So this is the importance, right? Just learn the concepts so that you don't have to rely on me when you're trading, because you can be with me on the live session, and unfortunately it can be some of those days that we've seen in the past 2 weeks or 3 weeks where we've just had some losses or break evens. But so long as, like here, since for me I risk 0.75% per trade, if I lose like this is a 200k account, so I lose like 1500, but if I win 3 grand. So for me to how do I put it? So I would have to lose 2 consecutive trades in a row to lose just the profit I made from this one trade. So this is the importance of just having a good risk to reward strategy, having a good money management strategy. If you're done for the day, if you've taken X amount of losses, you're done for the day, and then you come back the next day. And so long as you have good entry concepts, you have a good model, you have a good risk to reward ratio, you should be good to go. But anyway, we'll see what we get during this week. Week has started off well, and I'll catch you guys in the next video. All right, guys, peace. What's up, people? Today is Wednesday, October 18th. So we'll be going over this US 30 live trade we just took on the live session. So as you can see, it went up straight into profit, or actually started off in a bit of drawdown and then spiked up to profit and then came back to break even. So starting off, we'll start off with our daily bias. So daily bias today for US 30, daily bias was bullish based off of the last daily closure of an SAR level. Gold bullish daily bias, EU bullish daily bias, the US dollar bearish daily bias. And now for the US 30 trade, so this US 30 trade was actually based off of an hourly trade. So this was the hourly trade, so it was based off of this. So if I go ahead and replay, we'll go back to this time frame right here. So this hourly time frame, so we have a double SAR zone right here. So we have a double SAR zone. So if we play this forward, so you can see what this now gives us is a test entry. So that's your test candle. So this is why we have a test and reject. I'm sorry, bit my tongue. Test and rejection of a double buy SAR zone. So possible test and rejection. So we needed the next hourly candle to close above this zone. So hopefully close next to the SARs so that we can enter that trade immediately. But so here you can start applying this and US 30. So that's the entry we were looking for. We needed the next hourly candle to close somewhere around there. But you can see the next hourly candle closed all the way up here. So with a 50 pip stop loss, which is what we do for US 30, the key thing is that you always want your stop loss to be below the SAR zone you're trading. So you can see with that setup that you had there, your stop loss would not have been below the SAR zones. So here the key thing, at this point I sent a notification to the Discord. So if we go to the Discord right here, the trade ideas, you'll see that I said trade already validated, but entry was far from the SARs. I will wait for price to retrace to the SAR zone and look for an entry on the 1 minute or 5 minute time frames. If price pushed up such that someone who entered the trade on validation, price would achieve a 1:1 R or 1:1 risk to reward for them, I'll go ahead and forget about the trade. The key thing with validations that happen far away from SAR zones is that you want price to retrace back to the SARs before any volume based pump or continuation. So here you can see we wanted price to come back to this SAR zone, which it actually started happening. So in this zone, when price got to this area, we then dropped to the 1 minute time frame, which was here. And then what we wanted to see, I'll replay this on the 1 minute time frame. What we wanted to see here is that, and this one I'll just put it back. So we now wanted price to retrace to that zone. So this is the hourly zone, the hourly double SAR zone. So we needed a live 1 minute SAR to be formed. So keep in mind, again, on the 1 minute, 5 minute and daily time frames, I do not extend my SARs. Again, mostly because on the 1 minute and 5 minute, if you extend your SARs, you'll just have a lot of lines on your chart, because the lower the time frame you go, the more the SARs you'll get. So here we wanted a live 1 minute SAR to be formed. So I'll actually go back. So price got to this zone around this area. So we were just waiting for a 1 minute SAR to be formed. So it was formed in here. So at this point we were waiting for price to 2 candle closures above this live SAR, but we didn't get that. So price kept dropping back down. So at some point price reversed back to the upside. So when it reversed back to the upside, it formed this live SAR, and we had this 1 minute candle closing above it. So we wanted, or what I would have wanted to see next, is to see the next 1 minute candle come and retest this SAR and close above it. But you can see the next 1 minute candle closed all the way up here. So again, you ask yourself, so same rules as you do on the hourly or on the 4 hour time frames, when an entry, so here if you had to take this trade, as much as the trade was valid, you can see relative to your entry, your SAR is about 80% of your stop loss. So this can give way for you to be manipulated out, which you can see here. if you did that, you would have started off in drawdown and you would have gotten manipulated. So which is why on the live session, I said that I was waiting for price to come back and touch this 1 minute SAR, and then at that point, once it touched it, I would enter the trade right there. So which I did right there. So at this point, we were in the trade. So the trades started off in drawdown, a little bit in drawdown, and then ranged in that area, but we started seeing a change in momentum back to the upside. So at this point, the trade had already achieved a 1:1, because for me, for my trades, if you achieve 1:1 risk to reward, you go ahead and set break even. So for this trade, 1:1 would have been achieved somewhere around there. So in the live session, I asked folks to go ahead and set break even, and if they wanted to secure profit, but for me, I held the trade. So you can see at this point, the trade was at break even, but we had that change in momentum back to the downside, and or I got taken out of the trade. Possibly for other folks who had set break even as well, they had gotten taken out of the trade as well. And you can see here, that's the trade I posted in the results channel. So that's a trade I had bought using a 0.75% risk, 50 pips stop loss, 100 pips TP. Price came back and took me out at break even. So for me, I'm ideally at break even for the day. But that's the trade setup for today. So at least for today, I was able to do the trade recap on the day of, so that I don't have to do them at the end of the week all at once. But anyway, we'll see what the rest of the week holds. But looking forward right now, I do see a trade setup. So I'll go ahead and extend this SARs again. Possible trade setup on the 15-minute time frame. So I can go ahead and delete this because I've already done that setup. So you can see where US 30 is going. We have a triple SAR zone at this zone at 33,766. So I'll be looking for a possible test and rejection area for US 30. Also, let me see this. This is 782. No. So I'll be looking for a possible test and rejection of this area, or a break and continuation. And I'll probably be looking for a buy on US 30 if we get that. On the 30-minute time frame, nothing really on the 30-minute time frame. So US 30 possibly on the 15-minute time frame. Gold has just been spiking all the way up, so we didn't get any entries for gold today. EU, we had a possible setup for EU, a test and rejection here, but the rejection candle closed below this double SAR, so the trade invalidated. But you can see we are price is coming to some of these zones right here where we can find entries. But anyway, we'll see what the rest of the week gives us, and we'll proceed from there. All right, catch you guys in the next video. Peace. What's up, people? You know what? Today's an amazing day. Been looking forward to this, at least recording a profit. Now, today for this trade, we just took a nice gold buy with ideally no drawdown. And see, what day is it today? Today is Thursday, October 19th, and it's currently 11:54 a.m. Eastern time. Now here, for this trade setup was based off of a 15-minute entry. So I'll go ahead here and extend my SARs. So this was also based off of the SAR strategy. Now here, we'll go ahead and replay the charts real quick, and I'll show you guys where this trade was, or where this trade developed. So this is the area I want you guys to observe. This double SAR zone on the 15-minute time frame. So on the 15-minute time frame, we had this double SAR. So daily bias today for gold is still bullish, because the last closure of an SAR on the daily time frame was a buy SAR. Then, so we already know that. Then at this point, we then come in here and then look at, okay, since we mark our double SAR, so there was nothing on the 30-minute time frame. There was no double SARs on the 30-minute time frame. There's also only a single one, which I don't trade single SARs for this particular strategy. And then we wait for what price is going to do around this zone. So you can also consider these zones as supply and demand zones, right? But SAR stands for stop and reverse. You can also consider it as supply and demand, or support and resistance. There's ways to accommodate those. So here, we need a test. Since price is below, since our zone is below price, would get a test and rejection area, test and rejection entry. So we want to see what price will do around this zone. So this is a 15-minute time frame, so that's perfect. So we had a 15-minute candle come down here, pick up liquidity and go up. So that's our test candle. You can see that it tested that zone, that SAR zone. So at this point, you label it as possible test and rejection. So then you now need to wait for the next 15-minute candle. So remember, my strategies are 2 candle closures. You now need to wait for the next 15-minute candle for your rejection candle. You need the rejection candle to close above here, hopefully for it to close next to the SAR zone. So here the 15-minute candle, yes, closed above here, so that's a valid entry. However, and I'll use this markup right here, however, you need for your stop loss to be, so I use a 30 pip stop loss and 60 pip TP on gold. So for you to have entered this trade, you would have needed for price to close, to enable a stop loss below this zone. But for me, if I'm using a 30 pip stop loss, my stop loss would not have been allowed to be below this area. So I wait so I know the trade is valid, but then I would want to wait for price to come down here so that I look for an entry on the 1-minute time frame. So here you would just observe here. So ideally here we don't want gold to push up, so gold is coming back down, so that's perfect. So here we're in the thought process that gold is coming back down to fill us in. So you can see for somebody who took the trade up here, you'd have gotten stopped out automatically. So this is the key thing about patience. So we want gold to come down to this area. Okay, perfect. So it's come down to this area. So when gold now is in this zone, we now then drop to the 1-minute time frame and now look for that 1-minute entry. Now here, when we go down to the 1-minute entry, and if I go down to the 1-minute entry, I don't extend, or 1-minute time frame, I don't extend my SARs. Now here on the 1-minute time frame, gold has already tested our zone. Now we need a live 1-minute SAR to form so that we get into that buy on gold. So we need a 1-minute SAR to form, and in this case it will be a break and continuation entry because price would be above. So we kept waiting. Today the live session was a bit long, went for like 2 hours, so we keep waiting. So it's fine if gold keeps dropping, that is fine. So we keep waiting. Look at what happens here. We have a live 1-minute SAR, and then we need now 2 consecutive candles to close above this zone. So 2 candles closed above there. So that was the buy on gold on the closure of this candle. We actually saw it on the 3rd candle, but that was the actual entry we were looking for. So it comes up there, and guess what happens? Gold pushes. So at this point, the trade was already at a 1:1 risk to reward. So I went ahead and asked folks to set break even. So we are already risk free for this trade. And look at what happened. So kept pumping, there was some resistance here, but eventually gold spiked to full TP. That was a trade for today. We were risking 0.75% for this trade. So the win was a 1.5% win. So you can see here, I went ahead and updated the spreadsheet right here with 1.5 gain for the day, and now we are just minus 0.75% for the month. So this is a key thing, right? You can see we had losing days, 1, 2, 3 losing days each with max of like 0.75. We had 3 break-even days, but just 1 day of winning brought us back. We're still in drawdown for the month, but brought us back not too much out of the not too much drawdown. And then you can see here, where was that? I don't know if it's this one. No, that's another one. Yeah, but that was it. But also here, if you go in and what is this? If you go in to again to the 15-minute time frame, there was actually another test and rejection on the 15-minute time frame. So here I go ahead and extend my SARs again because this is a 15-minute time frame. Okay, so the same zone, we had another test and rejection setup. You see this candle? Test, rejection. And then this was the other entry. You could have had another perfect entry down there, and same thing would have gone straight into TP. But we saw this, like we didn't see this one. because we were on the 1 minute, and also we were talking about other things and also looking for analysis for US30. But that was another test and rejection. So remember, if you look at a zone, always look for those 2 candles. So look for what price will do for 2 consecutive candles. So that's what shows you whether it's a test and rejection, whether it's a break and continuation. And that was a nice trade right there. We were also looking for trades on US30. So there was another trade set up here for US30, this one. So this was a buy based off of the rejection indicator, which I'll rename to momentum indicator. So this just shows momentum or rejection. So here we were waiting to get a buy, because here the trade would have been valid, the trade validated here. But with this trade, you can see here, you would have gotten stopped out. So for this trade, we waited for an entry here. Unfortunately, we didn't quite get it on the 1 minute due to some, I went over that on the live session, but there was some buys. So if I go here, let me go here real quick, go to the 1 minute, go to the rejection, go to the 1 minute time frame. We were waiting, and now let me remove this ones for now. So personally, I have a moving average filter on the rejection indicator. But if you don't have a filter, you'll see there was a bunch of buys that were down there. But the issue is with some of these buys is that they come, they happen below the moving average. So the key thing here is to make sure the buys are, if you're buying, you want price to be above the moving average. If you're selling, you want price to be below. But on the 1 minute time frame, this right here should have been a buy. But I guess based off of how the logic, because here this one closed above the moving average, so it should have been a buy. But I guess due to some of the logic for the trade setup or for the indicator, it considered this candle as not being above a moving average, but it is above that HMA period. But anyway, that was we wanted to catch this one for US30, and we would have been so up in profit right now. But anyway, at least we caught gold. But that should be it for the day. And you can see here, I posted on the Discord the results. So booked a nice 1.5% gain for myself. And there's still losses, right? Even I do lose sometimes, but right, the key thing is just to make sure you're following your rules, and then you're following your trade setups. But other than that, I will catch you guys in the next review. We'll see if there's going to be any trade setups for tomorrow. All right, guys, peace.